Hello back guys, how you doing? In today's video I'm going to do something a little different from what I've been doing. I did make a video content in Spanish relating to the type of platforms or apps that we use to trade in the US stock market. In this one I'm going to talk about it in a little bit in detail, go over some things, some of the platforms that I use. Like I said, it's a little different from the typical content that I make, but it's something that I also like to do. And I think hopefully you find this piece of tutorial helpful for being able to trade in the stock market if that's a route you want to take. So the first thing I want to discuss here is the first app, and I don't know if you guys are familiar with this one. It's called Robinhood trading app. And in this app, it's basically a brokerage account. As you can see here, I'm just going to go really quick. You open up a brokerage account and set up this kind of like a banking account on there where you transfer funds, where you can trade in the stock market on there. So you can invest, create your portfolio account. There's the settings. And then I recommend, if you're going to sign up for Robinhood, to get Robinhood Gold membership. These are just some of the perks with Gold membership. It costs about $5 a month. Not bad, but it gives you access to like a level 2, looking a little bit more detail into making the trades. So what I want to discuss this is, of course, for a trading platform, I highly recommend this Robinhood app on there. And let's just go over how to use it. Very straightforward. This is the front page when you open up the app. So for stocks, I have a position here. Southwest Airlines, basically 18 shares bought here a couple days ago. Holding on to this for a dividend, ex-dividend, which means is the date that the company records for a dividend payment. If you look at the information down here, dividend yield. The dividend yield is the payment that this company will make throughout the year, annual dividend, and that's divided into 4 quarters. It's quarterly dividend. So they take the yearly dividend on there, divided by 4 quarters, and that's your dividend payment from there. And there's the news. The nice thing about Robinhood app, gives you the news on here. Like in this case, exactly like we're talking about dividends. It brings you to this information and the dividend payment. So this dividend payment, it's going to be 18 cents per share. So I highly recommend these blue chip stocks, popular stocks to trade in. Be a long-term holder if that's what you want to do. And it generates growth because right now the market is in a bullish trend. And you get those dividend payments on there. Even if it's a small dividend payment, it's basically getting paid off on those. So some stocks have dividends. You got to look at the yield. Some don't. Like I have a watch list on here for swing trades. This is some of the trades I'm looking at. I was invested in Coca-Cola last week. Earned a tiny, as you can see, KO dividend pending. It's like at $4.60 pending, which I'm going to get paid on this. So my payment for the dividend is July 3rd, 2023, where I'm only getting paid $4.60. It's awesome because I actually had this stock only for a couple days, and you're going to get a payment on that. So that's cool. So I highly recommend guys investing in, and you know Coca-Cola is a safe stock, and it's stock that's going to have growth on there. I had shares in this. I don't have shares anymore, but I'm still going to get the dividend payment. It's the same for Southwest Airlines. And then the other one I'm looking at too for potential trade, guys, is June 30th, dividend payment for US Bank. Again, it's great stock on there. It's been the banking sector has been underperforming. You guys probably read the news about some of the banks getting bailed out. Silicon Valley Bank. What I look for is these trends. So I'm looking at this graph, and I can change here the settings. Look at the candlestick. I like looking at the candlestick settings. So you go to chart settings, change your settings to your line or candlesticks, and that gives you a little bit more an idea of what to look for. So US Bank has definitely been, as you can see here for March, that's when the news hit for the banks. It's slowly making a recovery. So US Bank is definitely one of those. It is a safe bet because this bank is huge. It's not going to go under on there, and it's making a nice trend up. So this is a great investment to look for a potential entry within the next week. And why not, guys? We're going to get paid dividend payment on here. So again, we click on the news on here, your quarterly payments. It's a 48 cents per share dividend payment. As you can see, the annual dividend is 182 divided in between 4. And this gives you the information. That's the beautiful thing about Robinhood. So you get this information. You want to make sure to check out the ex-dividend date, which is when it's payable for, you got until June 30th. So you have to get into a position before the 29th of June. So let's look at our calendar. And 29th of June is on Thursday. So mark your calendar in there. When's the last day you can trade before the ex-dividends announcement on the 30th? So that's very important to keep that in mind. So that way you guys can trade on the dividends. And this is a great stock and opportunity to invest 3 or 4 days after the ex-dividend. Hold on to the shares. And why not, guys, get a $600, $700 position, small position, couple shares, and get paid that nice dividend on there. So you create your watch list. This is my watch list I have. Best Buy recently announced was a good stock to invest in. Great entries on here for long-term growth. Plus, they pay, again, you have a nice dividend yield, which they already paid out this last quarter. So definitely I look for trends too on the stocks. Like there's a position here on this particular stock where I'm looking at potential entry on here. This could be a potential good entry because the stock is kind of down a little bit, and you're getting I look at these trends. See, it's below 6, and it's a great entry for think about building a position here. And we look at this, it's made a nice recovery, and then all of a sudden it slowed off, but it's a good position. Look for these type of trends on there. That's part of my watch list. Pfizer was one of the stocks I was trading. Also, I was actually trading the options for Pfizer. Again, as a dividend paying stock. And I'm going to click on the trade. And there's 2 options. First, to buy the actual shares. So you put a share order here for the market price. Let's get you the market price. And then I'm going to click on here, the market price. So you can actually change these settings. So if you go to shares, buy in dollars, you can buy in shares. You can do a limit order. And that explains to you what a limit order is, how to execute a limit order. And then it shows you a stop order. So a stop limit order. And it gives you these order price. Usually I trade within a limit order, or I trade within the market. And I just click how many shares I want to buy. I submit this order. It goes through and gets me either on the market price, or I can switch over to my limit buy. So that's how you buy shares of the stock. And then up here in the left-hand corner will show you how much cash you have available to be making a purchase on this particular stock on there. So let's go back on here, back to trade. And the other future that I really like with Robinhood is a trade options future. Trading options is a little bit more sophisticated. You do need a little bit more education on how to trade options. I have a little bit of experience, and plus I have education in finance. So I know exactly how to trade options. So this gives you just a little bit of information on the different types of option strategies you can do. So this shows you here. But the most basic thing to remember is calls and puts. Calls means when the stock rises, you want the stock to rise up and you start making money on the option contracts. Puts, it's a more of a short term. Short means you want the stock price to go down and you're going to make money in a downturn. So calls and puts and options is a great opportunity because let's say you think a stock is going to make actually a downturn. You can go ahead and buy some puts. So we're going to look at here with the calls that I've been trading for Pfizer, which is 42.5 calls. And then you click on a position here, 42.5. And then you see what the last trading opportunity is here for the calls. This is a 42.5, and it has an expiration date of July 21st. So this is like a monthly call option. I've been trading the 42.5 calls this last week. Price is very nice, about 22 cents. And a call means you buy. Well, the definition of a call is you have the right, but not the obligation to buy shares at a particular price. So in this case, it's a strike at 42.5. You're expecting Pfizer to actually rise in price. So as the stock is rising in price, you want to get as close as you can to the strike, which is 42.5. and make money on that trade. So we know that stock is at 40. So you're basically hedging a bet that the stock price is going to rise up closer to that strike, which is 42 and a half dollars. And then you start making money as the stock price goes up. Or if it hits a strike, we call out of the money call. Still out of the money because it still hasn't hit the strike. And once it hits a strike on there, then you start generating money as the price goes down. And then again, I'm sorry, we're going to go back to the same Pfizer, and we're going to go back to trade options, and then we're going to switch over to the puts. So we're going to go July 21st again. On the corner here, you have buy and sell. So buy, sell. Sell is cover calls. I wouldn't get too involved into that. And to getting into those, I would just focus on buying calls and puts. So the other option is the put. The put option is you want the stock price to go down. So 42 and a half puts are in the money. These are in the money puts because the share price is 40. You can take the share price is here. Let's say I want to buy a put that's 37 and a half put, trading at 19 cents. If we click on this one. So this is a 37 and a half dollar put for a July 21st expiration. You're expecting the price of the stock to actually go down, and you make money as the stock goes down because now you're hedging the bet that the stock would gonna hit 37 and a half dollar put. That's the basic understanding with puts. It actually gets a little bit more complicated than that. I recommend to actually not trade options until you get more familiar with it. I do trade options just because I have experience trading options on there. But I would definitely wait on trading the options on there and just trade on buying the stocks. I think that's a little bit more simple and better opportunity. So, yeah, create your own watch list. I have my swing trades of 23 trades. Of course, like I said, I look at these particular trends on there, and I look at this, Apple, Tesla. Tesla's one of those stocks that has made a big increase. As you guys can see here, it's just been going up and up and up. Huge increase. Doesn't pay a dividend, but definitely has tons of growth opportunity on there. So look for those. I always look for these type of decisions. Create my watch list of opportunities that I want to be trading. Open up your account. Sign up for Robinhood Gold. And then another thing I want to talk about, guys, let's go back to the settings. And I'm going to go to investing. One thing I want to discuss is, as you can see, here's the different enables with gold. It's this is called day trades. I'm going to read what the day trade is. So day trade is a purchase and sell the same stock or option contract on the same day. If you make 4 or more day trades within a 5-day business, you'll be flagged as a pattern day trader. This may result in a day trade restriction on your account if your account value minus crypto is under $25,000. So this rule is very particular. You can only make 3 day trades within a 5-day trading period. As you can see, I've have 2 that I made on the last week, so I have 1 available. As you can see, I have a spot available to make a trade. And if I make a 4th day trade within a 5-day trade, which means buying and selling the same stock or option contract within the same day. So you can still swing trade and doesn't count as a day trade. Day trade is the same day. So if I buy stock in the morning and if I sell in the afternoon or sell within a couple hours or a couple minutes, then that's considered a day trade. And I have to have an account value of over $25,000 to not be flagged as a pattern day trader. So that's a little thing that really distracts retail investor, just because you're limited to the number of positions you can take. Imagine only having 3 opportunities to be able, if a stock goes sour or a position goes sour, you can't really get out if you have no day trades, or otherwise you'll be flagged as a pattern day trader. So that's always been a challenge for us, and I'm going to discuss how we can little bit get over that if we don't have the $25,000 account, which is a lot, to be able to day trade on there. So, and then set up your protection so that way you don't get flagged as a pattern day trader. So that's something very important to keep in mind on there. So right now we're going to go back and I'm going to show you guys how you can get through the pattern day trader. and I'm going to log into my other account. So I have another brokerage account. I've been having this one for multiple years. It looks like it used to be TD Ameritrade. It looks like Schwab bought out TD Ameritrade on there. And basically, this is another account, another brokerage account that I have. And I keep some other money in here. So again, we hit the trade. It's a little bit different than the Robinhood. So I'm going to do, let's do Starbucks in this case. Gives you the Starbucks ticker on here. You'll be able to buy shares, stocks, and ETFs. I think they're commission free. I've had this account for multiple years on Schwab. I haven't really traded on this. I use more the Robinhood account. I just like that one in particular. You can trade options in here. Apparently, you can also get into mutual funds, options, stocks, and ETFs, and then place an order basically here to trade stocks. So again, what's the reason to have a secondary or even a third account? Again, we go back to that pattern day trader rule. Remember, you can only make 3 day trades within a 5-day trading period. So the way to get over that is by opening up multiple accounts. So I have another 3 day trades on the Schwab account, which now it brings me a total of 6 day trades I can make. By having a second account, I could spread out the money into multiple accounts and still day trade. So that's why I have the Schwab account, just because I can generate another 3 day trades on the Schwab account, which is a strategy. Open up multiple accounts on there to be able to get over that pattern day trade, because it's always a restriction. It does limit you the opportunity to, like I said, if the position goes sour, to be able to exit out of that position. And then so open up another account. In this case, I have Schwab, and then I'm going to discuss the other account that I also have. So I have 3. I'm a master of 3. I call them master of 3. Another one is Webull. Another platform that I use on here. So I used to have money on Webull. Did relatively well. Here's some of the trades I made before. So it keeps a record of the trades. And then again, this is another platform, just like very straightforward. And I like the settings on here on these Webull. Highly recommend you guys to trade. You can also trade the position or trade options on here. So, and that's a way, again, having a third trading account gives you the opportunity to make 3 additional day trades on here. So that brings me now to 9 day trades available. So now it gives me more opportunity to be able to trade, spread my money out in different accounts, and have just multiple accounts where I can generate more day trades, get away a little bit from that pattern day trader rule by just having multiple brokerage accounts on there. So guys, I think that's how I'm going to just discuss the tutorial very quickly. Hopefully you guys enjoy the video. It's a little bit of different content. I hope this helps you out for those that want to put money and invest in the stock market. Just understand the risk. I give no investment advice. Just a disclaimer. I give no investment advice. I'm just giving you guys the platforms that you guys can use to trade. I'm not going to be the one. Look for your own trades. Look for your own opportunities in blue chip stocks and opportunities that have been yield. But again, I give no advice on there. I just went over briefly what I used to trade on there. Because at the end of the day, just remember there's a risk in everything. There's a risk of losing money also in the market. But there's also a potential for the upside making money. And the upside always can be more than the downside on there. So always look for that. Be careful on there. Understand your risk. And hopefully this helps you out. And you can trade on there with using the platforms I discussed on there. So don't forget to hit like and subscribe on the bottom below. I hope you enjoyed the tutorial. Send a comment below if you want to see another tutorial. I can do another one where we're trading live, or I can record this live where we're trading, so that way you can see how to generate the trades on a live market. Right now the market is closed, but that's just briefly the different types of platforms to use. And we'll see you in the next video. Thanks for watching. Adios, amigos.